Hey guys, what's up? Welcome back to another video. In this video, I'm going to be talking about a stock that could be trading at an interesting buying opportunity at the moment. And that stock is Lululemon. And we can see that over the last year, Lululemon is down around 7% in the same time period that the S&P 500 is down around 9%. And we can see over the 5-year chart, the S&P 500 is up 50% and Lululemon is up a whopping 300%. So they are definitely outperforming the market over the 1-year and the 5-year chart. So it'll be interesting to see where they go from here. But basically in this video, I'm just going to look into some of the recent news that's come out surrounding Lululemon. I'm going to analyze their financial statements to get a better understanding of the fundamental underlying health of the business. And then I'm going to finish off the video by doing an intrinsic value analysis of Lululemon using a discounted cash flow model to figure out if this stock presents a good buying opportunity from a value investing perspective. And so right here we can see in this article, they touch on how Lululemon posted a strong quarter, but their inventory levels soared, which we'll see in this article might not be such a good thing for an apparel company. And then on top of that, their valuation is pretty compelling compared to one of their chief rivals, and they have pretty interesting growth prospects for the next 5 years. And so if I scroll down right here, we can see that they point out that in the third quarter, Lululemon increased revenue 28% and they increased their net earnings 36%. Same store sales jumped around 22%. So they're definitely doing pretty well in the current economic environment. Even though there's high inflation and interest rates, Lululemon keeps on finding a way to attain market share. But in this paragraph right here, they point out that something interesting that happened recently was that Lululemon's inventory balance totaled $1.7 billion, which is up 85% year over year. And that might not be such a good thing for an apparel company because high inventory levels in this business means that the company might be forced to implement aggressive promotions and discounts in order to sell their merchandise quickly before it becomes obsolete and falls out of favor with shoppers, which is something that's starting to happen with one of their chief rivals, Nike. On top of that, we can see that they mainly rely on 623 stores worldwide, as well as through e-commerce sales on their website direct to consumer. And that being said, it's been a pretty smart move going e-commerce because our gross margin is averaged around 53.3% over the last decade, which definitely gives their brand some strong pricing power compared to some of their competitors. And so lastly, right here, we can see that they point out that the companies, they have high revenue and expanding margins, and so it's not really that much of a stretch to imagine that their profitability will continue to soar over the next couple of years. And so Lululemon definitely could be presenting an interesting buying opportunity right now, especially considering the fact that their stock price and their underlying financials have been growing pretty exceptionally, even in the current pretty adverse macroeconomic headwinds and environment that businesses are competing in right now. And so right here we can see this is their balance sheet comparing October 2022 to January 2022. During that time period, total assets have increased from around $4.9 billion to around $5.3 billion. And we can see that their business is mostly financed by equity with around $3 billion of total equity and $2.2 billion worth of total liabilities. They had a retained earnings line item of around $2.8 billion, which is up from $2.5 billion. So their business is growing. They're increasing their retained earnings because of retained net income from their income statement onto their balance sheet. And so right here we can see in their income statement, net revenue increased from $1.4 billion to around $1.8 billion, up around 28% year over year. Gross profit is also up from $829 million to around $1 billion. And then we can see net income is up more than 30% from $187 million to $255 million. So definitely very impressive earnings growth for Lululemon right here. And lastly, if I go to page 7, we can see that they're comparing the first 3 quarters for 2022 to 2021. During that time period, cash used in operating activities came out to be around $79.8 million, mainly as a result of the really sharp increase in inventory in 2022. And then we can also see they repurchased around $374 million worth of common stock in 2022, with about $17 million worth of that coming in this quarter alone. And something I forgot to mention is that in the third quarter, they opened around 23 new stores, ending with 623 stores that they had open retail locations at the end of the third quarter of 2022. So they are expanding their business both online and in retail. And so right here we can see this discounted cash flow model to try to figure out the intrinsic value per share for Lululemon. Yahoo Finance thinks that they're going to grow at around 22% compounded annually for the next 5 years. They had around $980 million worth of free cash flow in 2021, around a net debt position of $687 million and 122 million shares outstanding, which puts their intrinsic value per share at around $204 per share, which means that currently Lululemon is not trading below their estimated intrinsic value per share if they were to continue to grow at the growth rates of around 10 to 20% for the next decade or so. And so on the right-hand side here, I compared them to some of their competitors, Nike and Under Armour, from a financial ratio perspective. We can see that in terms of gross profit margin and net profit margin and return on assets, Lululemon has the highest ratios compared to Nike and Under Armour, which is definitely a good sign. We can see they have around a middling of the pack PE ratio, trading at around 32 times earnings at the moment, with Under Armour only trading at 14 times earnings and Nike trading at 35 times earnings. And then Nike is the only company out of these three companies that actually pays a dividend, and they paid out a dividend of around $1.19 per share for the most recent full year. And so in terms of a competitor analysis perspective, it does look like Lululemon is probably the best buy, mainly because their profit margins are so much better than their two competitors here, which obviously, as the article pointed out as well, gives them a lot of brand pricing power. And so they're able to, spend a little bit more money on their operating expenses to attain market share through marketing and sales costs that Nike and Under Armour might not be able to do as much because they do not have as high of gross profit margins. And then from an intrinsic value standpoint, looks like they're currently not trading below intrinsic value per share based on these current metrics. That being said, it doesn't necessarily mean that Lululemon is a bad buying opportunity, because their stock has increased 300% year over year, and they do have very strong underlying fundamentals on their financial statements. So I'd definitely love to know what everyone watching this video thinks about Lululemon. Is it a good buying opportunity at the current share price? Let me know what your thoughts are in the comment section down below. Leave a like on this video, subscribe to the channel, and I'll see everyone in the next one.